Let's be real for a sec. If your accountant only shows up at tax time, smiles, and says, "You're all set," you're not all set. You're flying blind.
Most business owners think having a tax pro means their finances are covered. But as we know, that couldn't be further from the truth.
In this episode, we're pulling back the curtain on why the traditional accountant model is failing entrepreneurs and why you should actually be tracking every single month if you want to grow, pay yourself more, and stop making decisions based on vibes.
If you've ever walked away from your tax meeting thinking, cool, but what now? This episode's for you.
All right, welcome to episode 1 of Unfiltered Profit. I am Seanna, and this is Caitlynn, my wonderful co-host and co-business owner, business partner.
Yes. Yeah. Of Prospera Strategy, LLC. This is kind of like our introduction to the world episode.
Yes, and we're excited. This has been a long time coming to get this podcast out into the world. We've been talking about it for months and months, and here it is finally. And we're going to dive into some quick tip episodes, these first ones, just to kind of get some good knowledge out there into the world. So let's start off. Let's talk about the elephant in the room. Why your accountant is lying to you, or at the very least, why they're leaving out all the parts that actually matter to running your business.
Yes. And before we panic, because I panicked when we wrote the title, I was like, no, everyone's going to think the accountants are awful. We don't mean that they're shady or they're trying to mislead you, just that they're kind of traditional accountants that are only focused on taxes.
Yes, exactly. And filing your taxes is not the same as running a profitable business or a business that has a lot of cash in your pocket and freedom to be with your family and do all the things you want to do. And that is not what we need. We need accountants to be your business partners that are helping you make good financial decisions in your business.
Yeah, because your tax return is a one snapshot once a year of your whole business. And just because it's clean and you filed it on time, it doesn't mean that there's not other things going on that you need to be aware of.
Yes, absolutely. And you can have a good, clean tax return, and it's just not the best business model for you. So let's talk a little bit about that. Where is the gap? Where are most accountants falling short?
Gosh, it's that they're reactive. At least that's what we both have seen. They're looking backwards. So we're filing taxes in April for everything that happened January through December of the previous year, and then sending you on your way with estimated taxes for the year. But those are still based on last year's stuff. So if you're doing better or worse, no one's adjusting that for you. So this is just a cycle of continual reactivity.
And I think a lot of times, I know for me, when I've had conversations with potential clients, they come and they're frustrated because they're just like, "Seanna, no one is helping me be better." Yeah, the taxes are filed. And this is even from a tax planning standpoint and an operational standpoint. They're sitting there like, okay, well, what do I do that's better? How do I make sure I'm minimizing taxes? How do I make sure I'm running a good business? I'd love to not work 80 hours a week running this business. I want things to be better. And that's not happening.
No, it can't. It can't in a box or whatever you want to call it, where that is the focus. Okay, you're one of many in a short period of time that's just trying to get something done. You really need that ongoing relationship.
Yes, such an important point. I think most often when someone just has a tax preparer and that person is not providing holistic, the bookkeeping and consulting and all those different pieces, they're paid to step in once a year and that's it. So you can't even really expect more from them. But there are things that business owners should be looking at. What are some of the biggest things?
Gosh, cash flow, right? So we can't equate profit to cash flow. And so often I think that's what happens. You'll see your tax return and you'll see a great number maybe at the bottom because you're paying a lot of taxes. And they're like, oh, I don't have the money for that. So we definitely need to be paying attention to things like cash flow. Margins would be the other. So when things feel out of whack and you're like, gosh, the business should be making more, or I don't quite understand what happened here, you can kind of go back to what we would call basics and look at those margins and say, hey, did my cost of goods sold go up? And if so, where and how can we adjust for it? And then you've got revenue. So pricing, is your pricing accounting for all of the changes? And Seanna, we're in a world right now where it feels like everything's changing. So if you haven't adjusted as a business owner, it's about time to. But if you don't know what's going on, it's really hard to make those adjustments.
Yeah, no, it's so very true. All right, we're trying to keep these episodes short. So let's talk a little bit about the cost of working with one of these traditional accountants where they're only looking at your taxes. So you're kind of flying blind from an operational standpoint. What could go wrong?
Well, you're going to get a big tax bill that you don't expect. That's a big one. At least that's where I usually hear people come in to talk to me, is that They're like, Caitlin, I just got this $40,000 tax bill. And all of you might be thinking that's fine, right? You made a lot of money. It's the not knowing part. It probably also cost you in some interest because you hadn't been making your estimated tax payments. It might cost you in more interest because you'll be setting up a payment plan because you weren't expecting to pay it. So that's a big one that we see. The other piece being kind of what we were talking about, those margins, that pricing. If you're just looking at your numbers once a year, you're missing all these opportunities throughout the year to fix it. And by the time you see it, you're already 4 months into a new year.
And not to be in the fear-mongering mindset or anything, but we are all in an uncertain economy right now. And if you don't know your profitability, like you don't know how much your employees are costing you or whether they're really truly efficient and generating as much revenue as they should be, you can't make strategic decisions ahead of time. You're just going to find out that your business has failed and file one last tax return and be done. And that sounds really dark, and I don't really mean it to be that way, but we have to know those things and make proactive changes to our operations as the economy shifts and changes.
Yeah, and the big businesses aren't holding back, right? Like Seanna can tell you, we just got an email, I think this morning, from QuickBooks about how they're upping prices at the end of the year on all of their software. They're not
Big
holding
price
back.
changes.
Their price changes. Yeah, they're not holding back. They're upping their prices without apology. So the small business owners, we have to pay attention and make those same changes.
Yeah, absolutely. Okay, so we've talked about some of the things that you should be tracking on a monthly basis: revenue, expenses, looking at profit margins, all that sort of stuff. Let's talk about what a accountant really does so that we can make this practical. I know I've even had some good conversations with prospects lately of like, how do you make this better? And so let's talk a little bit about that.
Yeah. If you don't know our history, and we'll try to keep this short, but Sean and I both had firms that worked this way. And so it was really nice when we combined, but that's that we are monthly involved with our clients. So we're doing their books monthly. We're providing them tax estimates quarterly, and those estimates are based on like their current numbers, which is not always typically done. So we're saying, hey, through this point in time, this is what you've made. This is what you can expect that tax bill to be. So there aren't any surprises. Also, so you're not giving interest-free loans to the IRS. So that's a big piece. And we're not letting you off the hooks, off with your books either. So we will be sending you questions and saying, hey, what are these things? So you're still required to be involved, as you should, with owning a business, right, Seanna? Like you as the owner can't just bounce, and we as the accountants can't just bounce.
Yes, exactly. You're not just pushing this all off on an accountant, and we're not running your business for you, but we're giving you all the information you need and handling all the tasks that you just don't want to handle. But I mean, we can tell you that we sit back every month, and as our clients' numbers come in, we're talking about like, well, is this a good month for them, a bad month? What's this trending like? And we're sharing that information with them as well. It's not just a once a year conversation. We take our clients' businesses very personally. It's hard to see them struggle, and it's always great to see them succeed, even though we don't own that success. It's just fun to see it.
It is. And just for those questions too, as a business owner that you don't know where to ask, should I have this much in my cash account? Can I hire this person? When you've got someone who's been walking with you month to month, we can provide that advice a lot easier than a one-time off consultant who hasn't seen the trends and hasn't seen what's been going on.
Yes. And I find too that as we learn our clients' businesses, we learn their employees, we just different aspects of that, we're able to give good advice. It's not just like, oh, well, you need to cut someone from your team or something like that's just very generic of like, oh, well, your payroll's too high. It's like, okay, well, we understand the people and the roles in your business, and we can give you advice that's tailored to you, not just a Google bulletin list of like, how do I make my cash flow better?
Yeah.
It's actual personal advice when you work with someone on a recurring basis.
It is. One of my favorites was we took an employee who was hourly, constantly pulling in overtime. We upped her salary to cover a little bit of that and then cut it off there, because now we've made it so the business owner can predict these costs. The employee was being treated fairly. We knew the employee was valuable. But those are the things that we get to see, as opposed to, I think, someone else coming in and being like, just deny the overtime. And that just can't always happen.
Yes, absolutely. Okay, so final thoughts. Anything that we should know?
Compliance is your bare minimum in running your business. It has to happen. So no matter what you do, you have to do the tax returns. It's required. You're going to be in a heap load of trouble if you don't do it. I don't care what rumors are out there saying the IRS is closing. It is not. You are required to pay your taxes. But if you're not growing your profit, you're kind of missing out. You're missing out on the story that your numbers can tell you and having someone to help read that and guide you with it.
Yes, absolutely. That's it. So we have to move beyond the traditional accountant. Accountants have to do better too and step up and provide those services. And if you're looking for someone to do that, we're here providing that level of service, trying to help you get the story out of your numbers and into your business decisions.
Thank you so much for joining us today. You can see all of the information that you might want or need in the show notes. Come follow us on Instagram at Just Prospera. And hold on and make sure you download because we are launching 5 of these at once, and then we'll be back with weekly episodes from here on.
Yes.